Hey everybody, Scott Riley, the Market Update Desk. We made it to September 28th, getting ready to close out September, which I will not be unhappy getting past. It's been a brutal month in the market, and we're hoping for a definite 180 change as we go forward. So today we've got some interesting stuff going on with speeches. Today in New York, there is an event called Delivering Alpha. In that, there's multiple Fed members speaking. Goldsby, Barkin, Cook, and Chairman Powell all speak today at that. It's going to be very interesting to hear what they say regarding the things that are going on right now, such as the UAW strike, how that's affecting things, and also the potential for a government shutdown. Now, keep in mind, a government shutdown doesn't mean government completely closes. There are probably the vast majority of government still continues to work because they're critical infrastructure and services. So when they talk about the government shutdown, there is a lot of press that goes on with it. But when you get into the depth of it, not as much closes as what most people would suspect. So it's going to be curious what goes on with those speeches today. There definitely is a possibility for volatility once again. It seems like every day going on. So on CNBC this morning, billionaire hedge fund investor Ray Dalio spoke and explained that he's expecting a slowdown in the economy starting next year. And we do here at the Market Update Desk agree with that. Now, generally, a slowdown does foretell lower inflation and lower mortgage rates. Now, we can't guarantee that, but we've been talking about lower rates and when it will come, not if. So even the big players on Wall Street tend to agree with us. So pending home sales, this came out as a dud this month. So pending home sales, which measures contracts signed on existing homes, fell 7% in August and are now down 19% year over year. This is likely going to translate into next month's report showing an annual rate of sales of 4 million, which is very under the original expectations when we started the year. Now, keep in mind, this doesn't mean we have a deficit of buyers. In fact, we have an enormous pool of buyers. This means we have fewer and fewer homes up for sale, which means it's better to buy a home in a higher rate environment when there's a little less competition, because wow, once rates come down, just imagine how much more competition you're going to face. We've been talking about this. Quarter two final GDP reading came out, showed the U.S. Economy grew at 2.1% annualized pace. That was revised lower from the 2.2 of what the previous estimates were. So that's the finalized number. It does get revised, I think, 3 different times before it's final. The numbers today from initial jobless claims came in a little bit higher than expected, not much, 2,000. So we had 2,000 more initial jobless claims than expected, so it went to 204,000. Continuing claims, those are people that are receiving benefits after the initial claim, rose 12,000 to 1.67 million. Now, not as big of a increase as what we had anticipated or what the market would have expected. So the bond market did do a sell-off this morning, which caused mortgage rates to go up. Core Logic loan performance. Now, we've all heard that credit card payments are getting farther and farther behind. People are using credit to cover daily expenses. So the delinquencies on credit cards have been growing. Interestingly, mortgage payments have stayed on time. In fact, those 30 days or more delinquent on mortgage payments only rose from 2.6% to 2.7%, so 0.1%, almost flat. The 90-day lates remained at 1%, so that again was flat. Those in foreclosure stayed just off their lowest levels ever at 0.3%. It shows that no matter what, the mortgage payment's getting paid before credit cards, car loans, other things, because we do see increases in revolving debt delinquencies and installment debt, which is car loan delinquencies. Now, mortgage-backed securities this morning. Sorry about that, everybody. Mortgage-backed securities are down 15. Actually, right now, we're in the green now. So we've changed in the last half hour from being in the negative to being in the green. We're up 3 basis points. And mortgage-backed and 10-year treasuries, have receded from the top of the day down. Still, they're at 4.64, which is a brutal number. It's gone up very quickly, very fast, due to the reasons that we talked about yesterday. As we go into tomorrow, we do have a very important piece of information, PCE, personal consumption expenditure, that's going to come out tomorrow. We are expecting the headline CPI to show an increase. That's what you're going to see all over the place tomorrow with the media. But the core, year over year, we're looking that we're going to see probably a 0.2 decline. This is going to be very curious on how the market reacts to it. Will they see the headline? Will the traders look in depth at the data in the core and understand why things are moving? So we're going to have to wait and see on that. I am a little bit concerned that we could get a little bit negative tomorrow. Next week is a really big week, but I think going to be a positive week. Wednesday, we have the JOLTS report, which is the job opening and labor turnover report. And that's been trending negative the last 2 months. We're going to see if that negative trend continues. And then we're going to get the all-important BLS jobs report on Friday. We're hoping that it's not a BS report, that it gives us real confirmed information. And that's going to be the variable within the birth and death rate of the BLS report. So let's hope that we can take a breath on Friday, that we don't get hit with a negative in the PCE report, and the market at least stays steady. September is generally called the swoon month in the stock market, and it's definitely been that in the 10-year bond market and in mortgage rates. We'll keep everybody up to date. Give us a call for detailed information, get you pre-approved, help offers get through. We're open and ready for business. In fact, the Cabana office is still open. We're hoping to get a few more weeks out of that in the year here. Give us a call, 616-293-2189. Scott Riley at the Market Update Desk.